first of all, how nice is it to see a little bit of change of scenery whereby the markets themselves are not plummeting? Markets today up over 10%. This is the chart of the Dow Jones Industrial Average. We have been more or less as low. They say 18,200 points almost. Today we closed at, however, 20,705. So we've been floating around this psychological round number of 20,000 on the Dow Jones Industrial Average. We've actually been holding below it for a number of sessions now. However, what we have created today is that of a long day white Morobozu candlestick whereby it has engulfed not only yesterday's candlestick on Wednesday, but this goes back to Friday, Thursday, Wednesday. Now we're starting to already push into Tuesday and Monday's real body candlesticks. Now this isn't going to be obviously a quick fix. We are going to see these short coverings. And again, the Fed itself has come out and said, look, literally we are going to do whatever it takes to stabilize and support the markets throughout this transition. Again, we're going through those S-curve accelerations. The United States is in the midst of, again, the pandemic spread, which we are hoping, if these lockdown laws are going to work and do anything positive, it is going to mitigate and also slow the spread of this virus. And again, that's where we expect and hope that to the conclusion of this S-wave, whereby we are going to plateau and begin to decrease or at least stabilize over time moving forward. Down here in Australia, we are in a very similar sort of situation, very similar to the UK. We do have, I believe, France and Spain that are up towards the top of this S-curve acceleration, or at least moving towards a little bit of stabilization. Who else do we have up here? Well, we've got China, which is all the way over here. We've got Italy, which is very close to the top as well. And also, we've got South Korea, which has moved over, right, the top of that range as well. So again, we've got President Trump as well saying more or less that he's not going to allow, right, the economy to actually be shut down further or beyond that of 15 days. Again, this is largely contentious. We have health professionals and bodies criticizing, right, that particular stance. There is a lot of, I guess, jargon at this particular point, or at least a lot of contradictory sort of headlines being wrote and also spoken about from different key people out there. And again, the markets are largely just still unpredictable, right? Whether or not this is going to be a lingering shutdown or whether or not we are going to operate as business as usual sooner rather than later, it's going to have a big, obviously, influence and impact on what happens, right, on price around these current areas. However, when we go to the S&P 500, again, up over 10% today, up over 200 points, going back and covering Mondays, Fridays, Thursdays, Wednesdays, Tuesdays, and Mondays candle. What has happened in the past, however, more historically, is that on any rally, or at least on a 10% update, this is pretty interesting, and I hope this doesn't happen again, but look, this market is still wildly unpredictable, is that we could see, or what we have seen over the past number of weeks, is that this has been an opportunity for people to re-establish their shorts, or at least to open it and enact new shorts, whereby very soon after, we've actually closed down below, obviously, where we would have opened today's session as at Tuesday. So again, we'll see whether or not the market is down to a factor or to a degree larger than 10%. I don't think it will be at this particular point now that the Fed has spoken and really shown its hand, or at least told everyone what that hand is. Again, hand over fist, they will be purchasing a lot of different assets, right? In an attempt anyway to stop these widening credit spreads that we've been speaking about, especially, right, wink wink, in the corporate junk bond market as well, and the corporate debt markets as a whole, which is quite interesting. And again, they're just going all out in an attempt to actually stop this, right, to stop this mayhem, to try and at least allow it over time to bounce. And then I assume that if and when the markets do begin to retrace, they will start scaling back down, at least in theory, or in some theoretical concepts, or more of a traditionalist sort of economic monetary policy approach. That's what they would assume to sort of do. But however, the balance sheet historically, again, it still hasn't shrunk whatsoever, going back to, again, the beginning of all of this QE nonsense. So the markets at this particular point on Tuesday, they like the sound bites. We'll see how long they like the sound bites for. Again, we are extremely oversold. Have a look at this on the Dow. Only just starting to adjust out of oversold territory. Again, the fast line on the MACD is starting to really definitively turn up this time, which is fantastic. The S&P 500 was starting to see a bounce out of the RSI. Stokes hasn't even woken up given Tuesday's candle. But again, that fast line is really starting to turn up on the S&P 500. And again, on the NASDAQ, up 565 points. You can see this fast line turning up as well, about to cross the slow line. We're starting to see deceleration towards the neutral point. RSI is pushing higher. Stochastics will begin to wake up, especially if we see any follow through to this move. It takes us back to the beginning of what we've been speaking about, whereby we've just seen a number of real body candlesticks begin to overlap one another. And again, it's really just the continuation of that. There isn't necessarily that of a candlestick pattern around this, or even at this particular point, a chart pattern on a daily time frame, just to show you, of course, the overlapping nature of these candlesticks. But it certainly is different to the types of candlesticks that we've been establishing on these markets since the beginning of this waterfall sell-off. It seems as though we're starting to see a little bit of structure, perimeter, congestion, whereby now, if you count the actual individual candlesticks themselves, 1, 2, 3, 4, 5, 6, 7 trading sessions whereby we've been more or less overlapping one another, or at least to a degree, some of those individual candles, which is quite healthy to see. It can even be extended up to 9 if you take into consideration these two other wicks over here. But I think you get the point. These markets are naturally going to reset. If we go out on the weekly charts, you can see, pardon me, that we're still moving into oversold territory, or at least the bearish momentum is still there. Okay, so that's the NASDAQ. You can see this also on the Dow Jones Industrial Average. The RSI is going to be the fastest of the three to begin correcting out of oversold territory, but the true indication is going to be that MACD signal. Now, what's interesting also is that we do have a little bit of a tweezer bottom candlestick establishing itself over here as well. So again, this may not lead to a V-shaped recovery whatsoever. However, there may be, for a prolonged period of time, a base which is being built across the board on the US financial market indices, given the Fed's stance on the market. And of course, just how quickly things are going to return to normal. I personally don't think it's going to be 2 days. I think in limited capacity, right, things will be reopened in 2 weeks, right, 14, 15 days. However, it is still going to be a relatively long lag until most of the economy comes back online. But maybe the markets are beginning to at least price this in. Maybe they are beginning to say, well, the worst isn't really what we assumed it was going to be. We had a really big long class over the weekend as to what we thought the big macro picture was doing. I still believe that to be true, everyone. Not moving away from that whatsoever, but we were talking about looking for a base and a bottom and allowing the market to actually show us where that was going to be. If we see this continue to hold, there's a good chance that this is going to be that area. And essentially that neckline begins to establish itself or become much clearer as well when you go out onto these macro time frames as well. Okay, so a lot happening at the moment. It is exciting, and really it's quite nice to not see the market down 10% anymore, or 5% or 6%, and to maybe think that this is the end of the first wave of the waterfall, and maybe this is the end of the waterfall for a number of months into the future. Just to think that maybe we might see a few people showing up and actually buying the dip here, so to speak. It is a very deep dip. However, maybe this is going to be some form of a prolonged base. We're going to have to follow along with those weekly oscillators, but as it stands on the daily time frame, we are most certainly beginning to turn up, which is a very fresh type of signal. Again, a signal that we haven't actually seen set up since all the way back at the late period of January, whereby we moved into that final little peak prior to what has been a very big sell-off to the downside. So again, things are looking a little bit more constructive. We'll see whether or not there are any legs to this on Wednesday, but a pretty decent session on Tuesday. Something we haven't seen in quite some time. Let's see whether or not there is any follow through to this move. If you have any questions, email me, success@pivotpoint-trading.com. It's James signing off on behalf of Pivot Point Trading. Farewell.